I wrote about it a little bit this morning. You have to be careful with anytime news this significant comes out. Obviously the chart levels are not so cut and dry anymore at that point. You're literally trading what's coming in now. Again, even now, coming across Twitter or whatever it happens to be, where somebody's trying to report news as fast as possible. I would be a little bit more inclined to wait a little bit this morning. As opposed to jumping in right away, unless you got some stocks like William had pointed here about buying some assets at distressed levels. If you got some stocks that have already pulled back prior to this happening, again, I'll just use the example here of FEYE. I love looking to bid this somewhere today. It's just a question of, you have to be careful sometimes where you don't expect gap and goes, but if we end up getting a gap this morning, today is a really good day to use that hourly chart reset that we've been, I've been mentioning since we all got started. It's very common for traders to want to be looking for a spot to bid in this case, just for argument's sake. But the market continues to slide down, and you keep nibbling, which is not really the wrong play. It's just that the nibbles never come back. So I would be looking to, at the bottom of every hour today, reset the clock to say, okay, previous hour was red, second hour part of 10:40, we started to trade back above the open of that hourly candle, and then I'd start to look for bid some of the stocks that I wanted to be long. So I would be leaning very heavy on the hourly chart today to reset my bullish or bearish conviction.
Yeah, I agree. I think that's really a great warning.
Well, I've been caught in it. I mean, there's, you reach a fine line between, no, these stocks are definitely long, but for whatever reason, I think I want to say it was not this January, but the previous January, in the spiders. And I'll pull it up just to give you an example because it's kind of relevant. I want to say it was here. Yeah, definitely here. The market was like really strong, and you can even see it by the prior like 5 or 6 or 7 weeks. This one day, there was one day in there that the market was down like 300 points or something like that. And because the market was so strong the prior couple of months to that, there really weren't that many days that didn't recover midday. And it was just one day that there was a bath. That nothing came back, and I actually was trading in my friend's office at that time, and I know a lot of traders got really hit that day because they did not have any intraday confirmation that their longer term bias was reestablishing itself. So and quite honestly, I know a lot of traders that got shut down early that day, like 11 o'clock, hit their stop losses and whatnot because they were bidding, because that's that was what was going on pretty much every day and week prior to that. But this, like I said, it was one 300-point day to the downside that did not recover, and it ruined a lot of people's months in that one day because it didn't come back. So I think we're setting up to have one of those kind of days, and maybe possibly even the kind of week, because there's a lot of activity is going to get in before, on a 4-day week, pretty big news. So again, that's just from my own experience. When something this significant is happening, make sure the intraday bias is confirming that your longer term bias. I'm not saying not to trade normally. All I'm saying is to pick a reference point that tells you, okay, intraday is now confirming my pre-market long or short idea. And I had an email conversation this morning about the opening range, and essentially you can either use the opening price to do that. However, if the stock opens, let's say it opens flat and then pushes down and goes down for the first hour, you have a lot of price action you have to recover before you want to get long. You can definitely use it, but it could take a while if you have a first good push down off the opening. But that's why then you could either switch to the first 15-minute candle, the most recent 15-minute candle, whether or not it's trading above or below that level, or the one I was just saying where you could reset at the top or the bottom of every hour. And to me is one of the most significant ones. And even that's even a trading strategy, believe it or not, Mary. And you
I am. Literally, you watch the volume on that though too, right?
Oh yeah, absolutely,
so
absolutely.
Find the volume when you're doing that. But no, that's actually a very successful trading strategy for many.
Yeah, I think a lot of people make things too difficult because there's so many other indicators and tools and all of that kind of stuff. But as long as you're going into the day knowing you're only day trading, for argument's sake, the most significant reference points are today's high and low, yesterday's high and low, the opening price, that kind of stuff, because that's where you're trading now. That's the window you're trading now. And I've done it myself, and I don't know if you have as well, but you have these longer term bias, especially when the market's not going down. Even just take a look at this 5-week window here in the SPY, six, actually, 1, 2, 3, 4, 5, 6, 7 weeks in a row where it closed above the open. You can get to the point where you start to get angry. You're like, I don't understand why I'm not making more. The market's not going down. Every time we pull in, it's an aggressive bid. And it only takes one day, one trade for that not to come back. And you have that pig-headed bias in your head that, no, I'm right, the market's wrong. Let me tell you something. I've seen historic blow-ups because of people saying, no, it's worked every other time. It's just going to work now. And that having some intraday reference point is very, very important. And look, I mean, it's easy to use moving averages, but moving averages lag. If you're trading off a 5-minute chart, you're talking about if you use a 20-period moving average, that's 100 minutes ago. Nothing wrong with them, but you got to keep them in perspective.
Sure.
Let me see, Ken. By resetting, you mean treat the most recent book? Yeah, Ken, that's exactly what I mean. But let's actually take it a step further. Let's say, for argument's sake, you want to be long a stock coming into the day, and you have the hourly candle from 9. Now, again, this is something very important to note as well. Each software is different how it resets the hourly candle. Some softwares reset it at the top of the hour. So in other words, 9:30 to 10:30 will be technically what they have as their first hourly candle, and then the rest of the hours ended, obviously ending at 4 o'clock. Some softwares use the actual hour from 9:30 to 10:30. So you have to be careful or just be very aware of which your software does. An easy way to get around that, though, is just use 30-minute candles. Just be aware of, if it's 9:30, okay, now the next, obviously I'm looking at the 2 30-minute candles. But yeah, so let's say for argument's sake, you want to be long today. Again, just using for an example, based on whatever long-term setup you're using, you would literally reset the clock every hour that needs to be green before you look for any type of entry. So if you're whether you're using a 5-minute inside candle, whether you're using a swing low, whether you're using a flag or whatever it happens to be, you won't even look for an entry unless that hourly candle is in sync with your longer time frame. And then to actually make that a stronger probability, then you could add, are we trading above the opening price? So now you have longer term buys coming into the day that you want to be long. Now you're trading above the opening price, which is now today's order flow is in sync with the longer term order flow. And then you're actually resetting at the bottom of every hour to make sure that every hour is in sync with those other two things. So let's just say, for argument's sake, you're trading, from 9:30 to 11:30, you have 2 strong hours, but then from 11:30 to 12:30 and 12:30 to 1:30, those candles are red or dojis or mixed, whatever it happens to be. That's literally telling you, not now. Then usually when the volume picks up 1:30, 2 o'clock in the afternoon, if it's a real trend, it'll establish itself again. And let me put it this way: if you haven't noticed yet, I'm really, really big on minimizing risk, and every single thing that I like stories like this and everything I talk about is because I've lost money not knowing these things when I first started trading. And something as simple as trading, keeping your trades to above the opening price. That's like if I was trading new traders tomorrow, I'd probably look, let's decide if we want to be long, and then let's make sure that today's buying or selling is in sync with that. We're not going to do anything unless it is. Just something as simple as that. And then when you add the hourly candle, you're like, wow, this is pretty cool. Every time, the terminology that Marion's brought up a few times is time frame continuity. It becomes a really, really easy way to have conviction because you're never fighting what's going on. You're never predicting when price action is going to stop moving in one direction or the other. Resetting that hourly candle is a really powerful way, especially when you combine it with the opening price and your longer term bias. And I think it's important for today because we have significant stuff happening today.
Yeah, I was actually going to say that, particularly when we have like a gap up or a gap down, I think it makes it even more a better way to trade because you're not trading off of the last bar because it's so far away.
Yeah, that could actually end up being the problem, man. Because sometimes, especially sometimes, the opening 15-minute window could be this giant window, and you're like, well,
Right.
how do I have a reference point? Well, we just
Right.
gave you one.